Good morning.
Good morning, everybody. Welcome to Option Pit Live. I am Mark Sebastian. This is Leisha Leslie. We're here every Friday at 8:30 Eastern Time to get you ready for the final trading day of the week and set you up for all the important things that might be happening the following week. And uh, and of course, we've got a long weekend coming up because the markets are closed on Monday for Christmas. Uh, Leisha, we just you got. You excited for the weekend. I know your kids are back from
Of
college.
course. Of course. This is a great time of year, isn't it? To be with our
It is.
families and watch your kids open those gifts. All
I
the
will.
food, the panettone. Oh my goodness, my favorite. Yes.
Hmm. Me
Yes.
too. I'll tell you what I'm not going to miss is the elf on the shelf. I listen. I we love our elf. It's fun every day we wake up and he's moved somewhere.
That's
But
hilarious.
you know, Um, all right. So we did just have some economic data hit, and it did affect markets. U.S. index year over year, actual 2.6, forecast 2.8, previous 3. U.S. PCE index month over month, actual down 0.1, forecast 0. Core PCE, actual 3.2, previous 3.3. U.S. core PCE price index month over month 0.1, forecast 0.2. So the numbers came in for PCE pretty light. You would think that would be bullish the market, and they must have been expecting something a little bit different because we had the market shoot up. S&P futures shot up to about 4,800 and then pulled right back down. Futures are now down on the day. um, I got to tell you, folks, it has been a choppy week, and if I'm a retail trader, uh, the confusion that's been in the markets over the last couple of days has to be really difficult to navigate. Um, and so yeah, that's something I hear from our traders. I don't know, folks. What do you think? How have you how have you liked the last couple of days? It's definitely been wild. Um,
Yes.
and so the economic data hit, and we've seen the futures reaction. Leisha, with all this confusion, um, can you give us some guidance in the charts and as to what is happening in these markets and maybe why they're behaving the way they are behaving?
Sure. Well, personal consumption expenditures is right. That's what came out
Hmm.
this morning. So they're
Yeah.
looking to see if people are spending, how much they're spending, and of course, with the core, they take out the two things we spend the most money on.
Yeah.
Isn't it amazing how they can finagle the numbers the way they like
Yes.
to? It's just, don't get me
Yeah.
started on that. Anyway, you know how I am. Anyway, we've come back now, haven't we? Now we're up again. So the initial reaction wasn't a big deal. Let me show you though. Let me show you my charts. Wednesday, what a crazy sell-off, right? And
Right.
our pro chat here at Option Pit, everyone was trying to search for what news came out. I mean, the market just fell out of bed. And it just, that 5 minute, let me show you the 5 minute on SPX. It was insane. And everyone's scrambling to like, what just came out? Here it is right here. What came out? What was the news? And no, the only thing anyone can find was one Federal Reserve governor person, whatever they call themselves over there, said, don't be looking for rate cuts so quickly or something like that, right? Isn't that all he
Hmm.
said? And look how we fell out of bed there. It was a pretty good sell-off. But the interesting thing, and look, we closed right on the low, closed
Yeah.
at the low. And then there we had the following day gap open, kind of meander around using your phrase, your term,
Yes.
and then
Close on the
tried to,
highs.
yeah. Um, what it created though, which is a very interesting Japanese candle pattern. this this very red bearish candle, and then an
Mhm.
inside day. That's called a harami candle. And harami means pregnant in Japanese. And that is a signal that's saying, not so fast. This market is not going lower. Now, we need a little more evidence what happens today, but there were harami candles in just about all the indices.
So what is, I'm sure a lot of people want to know, how many of you folks had heard of the word harami candle before? I'm sure some of you, but probably not many. What is the logic behind the idea that the harami candle says not so fast? Um,
The
there's
bulls
got to
took
be,
over. It's
yeah.
basically just the bulls came back and took over again. That inside day, it's the most clear on SPX and SPY.
Okay.
But the IWM and Qs have it too, but that's a perfect one right there. Inside day looks like a pregnant woman, and that's what the Japanese call it. And it's literally telling you, you gapped open, you didn't
Mm-hmm.
revisit the lows, all the bullish signs, and that you're negating that bearish day that happened. So we could be higher from here. I don't know. I feel like today will be a little slower and probably maybe like another smaller inside day. And then when everyone's kind of just enjoying their time off next week is when no one's, not a lot of players are in the market. That's probably when we have our Santa rally that they keep talking about.
Yeah. Well, today's an interesting one. It's expiration. It's weekly expiration. We're ahead of the 3-day weekend. We just came off quadruple witching, so there's not a lot of open interest. There's not been a lot of volume. The only thing I will say is that sometimes these days that you expect to be slow, on light volume days, all it takes is a couple of traders with an axe to grind,
Exactly.
and the market can go make a much wilder move. How many of you folks remember? I want to say it was Thanksgiving, like over Thanksgiving. After Thanksgiving, there's a half day on a Friday. And some news came out over Thanksgiving, and the market was down like 1.5, 2% on the open on that Friday. That was a half day of trading, and nobody was there to defend it. And there was a lot of there was nobody there to defend it. We ended up, I think, rallying back a little bit, but it was a really ugly day in those markets, and out of nowhere because there's nobody there to trade. Um,
That could easily happen next week. I think.
yes, one thing my personal trading, I don't put on anything crazy next week unless I have a serious axe to grind.
Correct.
Um, if I don't have an axe to grind, the trade has to punch me in the face and say, "Look how amazing I am," in order for me to get involved. Uh,
Right.
yeah,
Right. I wouldn't take any option position in next week's expiration. I would go out to the regular Jan personally, if you wanted
yes.
to have a trade on.
All right. So we've got the major indexes that you've covered on the charts. Next up, silver and gold, silver
Silver
and
and gold
gold,
and crude and
silver and
Bitcoin I want to look
gold.
at too.
Leisha will chart for thee, silver and gold
Gold
candlesticks.
gold has held well, after breaking through it and coming back through it, this is a little what you call bear trap.
Mm-hmm.
It's back to my median line and holding that support and now rallying. And now yesterday, the MACD, or today, MACD is turning positive. So yes, gold looking higher.
All right,
Let's look
real
at,
quick. What is a bear trap?
oh, sure.
Um, you
Bear
know,
trap
uh,
is when you're you're within this rally, and all of a sudden you get a little mini sell off, but then it completely reverses very quickly. and you're back to where you were, and you're going to continue your rally. That's where, everyone sees it breaks through that resistance line, and people think that it's going to go lower, the rally's over with, and then it just reverses right away. So all the people that got short are trapped down here short and scrambling to get out, or that's a bear trap. And there are bull traps too. This is a bull trap. Just, everyone's watching the same, pretty much the same. Everyone watches the 50-day, the 200-day, the 21-day moving averages. And when the stocks flirt around with those levels, they sometimes break away higher or lower and keep going. But when they don't keep going and they come back and reverse, that's where people get trapped. Does that make sense?
Yes, it does. Does that make sense to you guys? And then MACD, I've heard of it. I have a general understanding of it. Just real quick, you said MACD went positive. What does
Yes. It's
that
rolling over
that mean
positive.
for us?
Well, you have a signal line and you have the actual line that follows the pricing, and they flip back and forth from each other. And when the signal flips up over I forget the name of the other line. I didn't know we were having a lesson here.
No, but if it's
But
not
you
a
see it's
lesson,
green and
just a real
red,
quick
right?
explainer. Yeah. Yeah.
We all know what green and red are. It's turning positive. It's green. It's
Yeah.
flipping up.
All right.
Sorry,
So there you
I'll get
have
the
it.
name of that other line. I can't remember what it's called.
All right.
One's a signal, one's a.
So there's gold.
Yes.
All right. And
I was
now,
going to say, do you want to see the dollar real quick? Gold and oil are always affected by the dollar.
yes, they are.
And I believe, yeah, there you go. Dollars broke support there. Those lows right there were support today. We're trading below there. So that's positive for not only gold, but crude. I've been watching crude the last couple weeks.
It's bullish for stocks. It's bullish. It's bullish for bond prices. It's generally good across the board. It means money's coming out of cash and into credit, equities, and then that also bearishly, that's also just that inverse correlation between the dollar and gold and oil.
Commodities, right?
Yeah, commodities.
My crude chart, you can see it's struggling to break through that first level of resistance on my pitchfork, but I think it'll probably bust through there, especially with the dollar looking the way it is. So I do still like, I talked about XLE last week. I do still like XLE. It's not too late to get into there for XLE to go higher. Still consolidating. Still consolidating. I like XLE still higher. How about Bitcoin? Let's look at that real quick. That's had a some pretty good moves in the last couple of weeks. I believe it's going higher. I still believe I can still see a bull flagging on my chart. There you go. You have so you have a little bit of a sell-off here. It's held my support there. Remember, the closes are more important than the intraday.
Right.
And these higher and lower shadows are what the intraday trade is. The close produces the real body, the colored part of the candle. And that's much more important than the intraday. But at the intraday, it gives you some signals, who is in control, bulls or bears. But now you have a really nice bullish candle there. And here we have a couple of less movement days. That's consolidating a bull flagging there. MACD's still negative, but ready to turn up. Dad, you're going to be on camera. Say hi to my dad.
Hi.
You have to turn the heat on back here.
Filming from home, you can't. It's part of life, folks.
All right. I warned him. Your dad, you're going to be on camera. He just.
Yeah. All right. So there are there's kind of a good chart review. I'm with you on Bitcoin. Audience guys, what do you think? Where do you think Bitcoin's next move is? Do you think it's going back below 35,000 or above 50,000? Let us know. Let's jump into some major headlines and let's review our trades over the last few weeks. Now, over the last couple of weeks, I have thrown out two trade ideas. One was in Qualcomm. That was my first trade idea. It was one where I said, you know, I want to say our first show was it's crazy. Just it was the 8th, and Qualcomm was trading was open that day at 131.22. It's up $10 since we threw that one out.
Way to go.
TFC was my idea from last week. That was our settle on the what was our settle? When did I discuss that one? Was that on the 15th? After it already made the move, or yeah. So TFC still just kind of sitting there. It had already made its post-Fed move. I still like TFC to go higher. I am still long March 40 calls in this, and that is the trade that I like as a way of expressing my opinion in TFC going higher. Leisha, you looked at.
Sure. Let me show you my Riot. My original first week, I liked Riot, if everyone remembers. It was trading down here, and I talked about it trading above my resistance there. These candles are looking a little ugly how they turn red on the day, but it's still a consolidation up here at this higher level. I still think Riot's going to trade up here, almost 19. And the Bitcoin chart being bullish is my
it's bullish Riot.
further evidence. So yeah, I still like Riot. I'm in the Jan 19 1619 call spread. Yeah, I think it was the 1620. No, I'm sorry, it was a 1621 call spread.
Oh, that
paid about $1.40 for it, and it's trading still right around there. If you like to hop in there,
that's a good risk reward.
Jan 19 1621 call spread and Riot.
All right,
and we're up a little today. We're up 30 cents. We'll hopefully get a nice green candle out of there today.
All right. Now we've got some interesting news, and the market wide one is the bond market. That the 10-year, the 30-year bond is now below 4%. 2 weeks ago we were talking about the 10-year below 4%. Rates have moved so. If you want to know why the market went parabolically higher, it's interest rates. They are always the dog. Interest rates. People will try and tell, equity markets. The bond market is always the dog. The equity market is always the tail. And the bond market, the move that it's made, has been what has facilitated this wild rally in the S&P 500. And now that the 30-year is below 4%, that's going to have an even further effect on mortgage rates, which may be getting back towards 6%, which brings that affordability back to about where, a 6% mortgage, it sounds about right historically, right? Maybe 6-7%. I know that they've been as high as 15, and they're never going to 2.5 again, folks. So I don't think that's ever going to happen. But 6-7%, some normal mortgage, that might be a little bullish for housing.
Well, I think we need definitely some kind of interest rate, right? That whole ridiculous of zero and the manipulation. If they could just stop meddling so much and just let the economy be what it's supposed to be, and it wouldn't be so.
Well, and a slightly higher rate, I think, actually encourages growth because banks are more willing to loan. They're getting a better rate of return. They can manage that risk easier. It's good for the saver because they're getting an actual rate on their savings. Cash pays a little bit. It is again, that is the bullish case. I think that stable rates, maybe falling a little bit, So I know stable rates, maybe falling a little bit, is going to be bullish for the mid cap banks, and then it is going to be really good for community banks, the ones that are actually engaged in loans, engaged in the business of their community. So there are hundreds of publicly traded small community banks. I can't think of any off the top of my head. I'm going to do a little research on this, but there are some fun little community banks. Those are going to have, I think, a really good 2024. All right, let's bring in Andrew to hit on this next one. Andrew, welcome to the show. Good to see you.
How do?
This is
Hey,
Andrew
Andrew.
Giovinazzi, our
How you
president
doing?
and chief options strategist.
Nice to be here.
Andrew, we're going to hit on I want to hit with Nike, because I don't know if you saw Nike this morning. You can share my
Share your
or
screen.
you share Andrew's screen. It's down 12% right now. $14.
Wow, no bueno.
That is not good. And you know what's interesting is this is murdering Lulu. Lulu's down 2%. Yesterday, at its highs, and Lulu closed at its highs, Lululemon was worth more than Target.
That's a lot of yoga pants.
That's
That
a
is
lot of yoga pants.
lot of yoga pants.
I smell a pair there. You sell the Lulu and buy the Target.
Yeah,
Just-
that is a great pair. I may put that out today, because that well, I wish I'd put it out yesterday. I'd look like a genius. But Nike just absolutely got slashed, and now you're seeing Lulu, the specialty retailers that are in specialty clothing. So this is going to have a negative effect on, like, AEO, ANF. ANF is Abercrombie and Fitch. It's down 1.5%. Any of those types of retailers.
Yeah. Sounds like the retailers are kind of, looks like people are pulling back a little spending there. Maybe they are price sensitive after all. So they're not buying $300.
I got to tell you, I'm surprised, because we went and visited Santa on last Saturday with the kids. And he asked my older son, who's going to be 14 in January, what he wanted for Christmas. And he said Jordan 1s. And he had a color and stuff. And the Santa looked at me and just went, I go, you hearing a lot of Jordan 1 requests from the teens? He goes, I'm only hearing Jordan 1 requests from the teens. But,
That's a
maybe
good conscious
that is
signal.
just such a tight segmented piece that's affecting things. But the retail story is interesting. They've been so strong.
Yeah, I'm just looking at Nike now over the last year. So, I mean, it's near a lot of stocks that look like this, right? They look pretty good. Beginning of the summer, sold off, and now they're trading near highs again. So I don't think this is, it's not too different, but I would say it is surprising. And it's probably an opportunity. I mean, if you're a long-term investor, like writing puts, hundreds, 95, something like that, puts that wouldn't have had any value. Of course, that's my segment next, but
yeah, well,
you decide when you want to be an investor or be a trader. You got to decide which hat you want to wear.
Absolutely. And then I just
Would that go on top of your Santa hat?
I think so. Yes, you need your are you wearing your trading hat or your investing hat? I don't know which. I guess I need another hat. I need my orange hat, for the trading hat, and the Santa hat for the investing hat.
That's funny. All right. Well, it's 8:55. I had a couple other little stories that I want to hit on. China gaming. Berkshire filed they're buying more Oxy.
I can pull Oxy up.
Yeah, folks.
Oh my.
Warren Buffett has openly stated when Occidental Petroleum gets to $56, I am buying.
Guess what?
It got to $56, and guess what he did? Why do you have my screensaver?
You know what? It's there's nothing like live. There's nothing like live.
Well, here, show my screen. I want to show.
I got
this
it. I'm good now. I'm good.
Here is $56 a share.
Right.
On Oxy over the last year. Take a look.
Every time.
I'll go
bouncing.
out 2 years, and obviously we're coming out of like a major oil sell-off. But since then, since the beginning of 2022, since we came out of COVID, 56 has been a buy every single time without fail.
Hey,
So,
Mark,
folks,
why don't you show them the vol? Show them like a longer term vol too.
So, yes, I will, folks. So when you see Oxy trading below $56 a share, what is Warren Buffett doing, and what should you be asking yourself when you are seeing Oxy below 56 or at $56? Do I want to buy more? Is what I should be asking, is what I ask myself.
Yes.
And that is something you can ask yourself. And Andrew, you wanted to look at these long-term implied volatilities.
Look at how cheap the calls are.
They are cheap. It is incredibly inexpensive to buy calls in Occidental Petroleum.
That would even down to the dip. Look at how cheap they were. So just as a reminder for people, if you're looking for opportunity, sometimes the price of the options don't follow the stock, and you have kind of a sweet deal for calls.
This was a great period of time to buy calls in Occidental Petroleum. I may have done so when that happened because Occidental went below $56.
We did it in our live show, by the way, on Monday.
We did.
All
right. So now let's talk about some trades that we like, some trades that we're looking at. Let's bring Leisha back. And Leisha, we, let's quickly revisit on, you talked to XLE and Baba last week, and you've got a couple ideas this week. Why don't you share your ideas?
I do. Let me show you the GM chart. We had a nice breakaway gap back here, consolidation. And then, with consolidation, it's just gearing up to continue in that same direction. Another leg higher and more consolidation. I put in a support level right below that, 35.5, 35.44. This is all consolidating, ready to take that another leg higher. I don't see resistance, guys, until about 38.5 and maybe even 39.5. So I like GM to trade higher. As we said earlier, I would go out to Jan 19 just to get beyond the holidays, and the at the monies, the 36 halves are just slightly out of the money. They're about $1.07. They should go down a little bit by this afternoon. I like those.
All right.
And
I like that trade. You got one more?
I have one more. IBM is a very interesting chart. I'm not ready to make a move yet in IBM. GM, I would hop in. I'm okay hopping into GM. But look at IBM here. We had a nice shooting star there, which is a change in trend from this uptrend. I do have support here on these lows. This consolidation previously, these coming back to revisit is a support level. I do have this little mini downtrend line. it's very new, right? It's only got a few days under its belt, but still, it's held all those days. And then right below here, I have the 21-day moving average. So that's providing support. This convergence of all this support, resistance, IBM needs to make a decision here. Is this support going to hold or is it going to collapse? If IBM closes below 160, I would hop into some Jan puts in there.
All right. There you have it.
Wait for that close below 160 though, because this
Close below
could
160.
pop. Yes.
All right, now it's time for Alicia and I to take a soft little break. Andrew's got Andrew's trading vehicle. Is it ready to take off or is it going to break down? It's time for Andrew to look under the hood of his trading vehicle.
Hello, everybody. Thank you. You could probably show my screen now. So 2 weeks ago, we talked about Chewy. Just as a reminder, I picked the stock in the 1x2. Stock was 20, 25. So go me. And I'm now into the 22, 24, 1x2 call spread against the stock. And hopefully I'll be just taken out at 26. I'll take my bucks and buy calls. So that's what I did with Chewy 2 weeks ago. So that's working out okay. But today we're going to do something a little simpler. Just looking at hood. Now, from a vehicle point of view, there's a couple things just to notice when you're looking, when I look at a chart, how the market is responding. So generally when you have like up stock, up volatility, and this is 90-day volatility in hood, you have a lot of call buying interest generally pushing up prices. That will make it a little more, I think, volatile in the short term. But at the same time, people are buying calls because they think it's going higher. So if I'm making an investment decision, I want to decide, do I want to buy calls really, or do I want to sell puts? So just as a refresher, right? So a long call, basically you put money into the trade right around here. That's whatever the debit is. And then stock goes up and you have what I just call a capital gain, right? You have max potential upside. Everybody likes buying calls when they think the stock is going to rip. So it's definitely how you want to think about your stock. Do I think it's going to rip? If you do, as in rip up, you want to buy calls. Now, that's what's been happening in hood over the last, I would say, couple weeks. Mark and I have been looking, but for the most part, very heavy call buying action. Door number 2 is what I would call the short put. So a short put is you're only going to get what you sell the put for. And it carries the same risk of the stock. So you can see if you sell a put and the stock goes down to 0, you're going to lose much more than the credit you got at the beginning. Everybody kind of forgets about that. They just think the short put is free money. It is not. It is the opposite of free money. So what it is to me is I think of it more like it's almost like a dividend when you buy a stock. You have the risk of buying the stock. You're expecting some kind of income stream for a period of time, but you don't have the upside. So when I sell puts, I mostly think the stock really can't go down a lot. So you have, if you're go bullish and you think the stock's going to rip, generally you want to buy calls. And if you think the stock is just going to go sideways and you want an income stream by selling a put, which is equivalent to a dividend, but with all the risk of owning stock, you sell puts. So here in hood, I would say, can hood go back to $8? I guess that's the cash level from the IPO. Sure. I don't think there's tremendous amount of risk in hood. I don't think it goes to 0. I think the cash level is around 10. It's kind of sat around there. The question is how much do you get if you sell a 10 level put? So even if I go out to February and I sell the 10 level put, I'm going to get 2.2% on risk. Basically, it's just the cost of the put is $2. The strike is 22 cents for the put. If I sell it, I'm going to collect 2.2% until February expiration, which is a little less than 1% a month. To me, that's not a very appetizing put right. I'm just not getting enough money for the short term. So this is a case where I would rather buy calls. Currently, I'm in the June calls, the June 15 calls, and I'm trying to decide whether I want to add or not. Mostly because I think Hood is a stock that could easily go back to, I know it's been a while, but if you go back in history, it was a meme darling way, way, way back here. And I think it's going through a long, if the market kind of repairs, which it has, and the public starts to come back into the market, which they tend to do in a bull phase, Hood should do okay. So I don't think there's really enough yield to sell puts. And I would just rather buy calls, which is what I have. So right now I'm into the June 15s, and I'm trying to decide if I want to add some short-term options as well, but I haven't done anything yet. The alternative is just buy call spreads. You can buy very inexpensive call spreads that cost you $1. So remember, one call spread that costs you $1 is it costs you $100, but it's the equivalent of spending $1,300 on the stock. So you use calls in lieu of stock to save money in a stock that is more volatile. And I think that's a good use of calls when you think the stock is going up. Personally, in Hood right now, because I think there's more upside, I'm not interested as much in the call spread. I'm just straight long calls, and we'll see what happens. If I make enough on them, I will roll them to another strike. So if the stock goes to about $15 to the strike, my calls should double in price from what I paid for them. And I'll probably roll up to the 20s and buy more time. So I'll sell the calls I own and then roll up and have what I'll call like a house money roll. So I can't lose any money on owning the 20s because I already took the gains on the 15s. And then I just see where the stock goes. And by buying more duration, it's not exactly a stock investment, but I'm buying a lot of time. If we get to 20, 22, $24 again, anything's possible, then I can roll them up again. So as long as things are working, I'll roll them up. If they stop working, then the roll ends and I'll go look for something else. And then maybe it'll be a time to write puts on the stock, maybe the 15 strike or, wherever it happens to be. So you just have to have a little plan in place, decide how long you want to stay in the stock. And I think also important, you have to have an idea of what you think the stock is going to do. If you think the stock's going to rip, you want to own calls. If you think the stock is going to go sideways for a while and there's enough yield in the put sale and you're ready to take the risk of selling a put or taking delivery on the stock, then you sell a put. So right now, I just think Hood's a better long call candidate than a short put candidate. Even though the vol looks a little high, it's definitely on the higher end of the scale. Farther out, it's not as high as it can be. But I think relative to the type of move I'm expecting, I don't think the vol's too high. And that basically is my vehicle and my cage match between buying the call and selling the put.
All right. I love it. All right. Now I want to do a quick look at some order flow, some strange order flow that I saw. And Andrew sent this along and I looked and I went, ooh, look at this. And Leisha, I want your look at the charts as well. This is NEXT. Sure. Share my screen here. I want everyone to take a look at this. Just focusing in on
sorry, what's the ticker again?
NEXT.
Next.
Oh, N.
And this is next decade. And they are coming after it. They're buying February 6 calls, April 6 calls. They're buying Jan 5 calls. I looked today, all of this paper of just one-way call buying is opening. It's all opening. And this is not a stock that trades. And there is a ton of bullish paper on NEX, and I'll show you. Yeah, I mean this is the open interest has changed, but you can see they bought 1,700 of the Jan 5s, 5,200 of the Jan 6s, 5,500 April 6s, and from an open interest, the average volume is 113 contracts. It did 13,000 yesterday. All calls, 196 to 1, 67 puts traded all day versus 1,300 calls. That is definitely something interesting, and this one might be ready to pop.
So it's in the carbon capture business, Mark. I was trying to get more information on it, but I asked Frank about this one. And it's carbon capture. It looks, they might get some bucks from the administration or something. It feels like one of my favorite phrases, Mark. He's like, this smells like a cheater, like somebody that knows
Yeah.
what's going on. So
yeah, somebody that isn't
that whiff.
Someone that we would say it's well informed trading.
Yes, well-informed trading. Yes.
Alicia, are you seeing anything on the charts here? Or
I look at my it's consolidation. What the Japanese call a box range. Consolidating here since back in November. Basically between 452 and 498. We had a little bull trap right there. Consolidation. I would like to see it close above here, although you do have some compelling evidence with all those call buyers.
Yeah.
Or that call buyer. You have cleared the 21-day to yesterday. You'll have a little resistance right here at this previous high, 527, but from there, 557 is the 200-day. So, and this is a nice bullish day yesterday after this. Yeah, you want to see it break out of this consolidation, but I think you're okay maybe front running or hopping in before that.
It might be worth taking a small stab. I'm not gonna go hog wild on something like this, but it might be worth a small stab. All right, we got about 2 minutes left, a minute and a half left. Let's revisit futures. S&Ps, they decided they like the news now. PCE, we're up about 10 points, good for 0.2%. NASDAQ futures are up 46 points, good for almost 0.3%. Russell futures, the Russell 2000, up about 0.4%. So markets have decided that they are going to rally into the into the open today. What's your take
ahead of
on
yourself to close?
Yeah. What is your approach here for the rest of the day from a trading perspective?
Oh, me, I'm riding basically a couple long calls from some of our ideas from OP Mentoring Trade Desk. So into the end of the quarter. So we'll see what happens there. I would like to see, I think there's an opportunity for the short vol products. So I'm looking to buy some calls in SVIX, but I'd like to see VIX down on the day into a 3-day weekend, which is kind of still a little iffy to me. So I would like to see vol down to get a little more conviction in the rally today.
I got to tell you, if we stay bullish all day, this afternoon the algos are going to try and take control and run us hot. That would be what I would say is going to happen.
That would make me happy.
That we're going to meander. We're going to kind of meander all morning, and then if we're up about 12, 13, 14 points in the S&P at midday, the algos are going to take control. We're going to end the day up 0.5%, 2/3%, and make a serious run back at 4,800 for the S&P, because futures have broken 4,800 again. There's not a lot in their way, so I'm looking for a potential kind of afternoon algo rip.
I like it.
All right.
You owe me a soda.
All right. Absolutely. All right, folks. Our time is about up. I want to thank you guys for joining us here at Option Pit Live. Andrew, I hope you have a absolutely wonderful holiday weekend with your
Thank you.
family and friends.
Yep. Merry Christmas, you guys.
Merry Christmas. Felicia,
Merry
you
Christmas, everyone.
Yeah. Hi to your
Thank you
dad.
for joining us. I don't believe we'll be here next week, will we?
I may do something for like 20 minutes just to check in, but
Okay, let me
I
know.
don't think we're
I
doing a
can
full
join
show.
you.
I can be
Yeah.
here, Mark, Friday morning.
All right. So we'll try and check in next week for a
Okay.
quick bit.
Sounds
But
good.
we hope you have a wonderful long weekend, and for those that celebrate Christmas, Merry Christmas. So for Andrew, the option wizard, the Duke of Deltas, and Leisha, the Queen of the Candles, I am Mark Sebastian, your only option. Have a good one.
Take care. Merry